I am Jateen Trivedi and I shall enlighten you with some key important triggers for this week's commodity market, and we shall also discuss about some key important levels which are going to be acting as a very strong supportive or resistance zone for this week technically on commodities front. So we'll start with the first and foremost bullions market. Gold prices, as we have seen last week, have been a little bit on the selling pressure from the levels of around 52,000 on the higher side. We have seen that the prices have been unable to cross the levels of 52,000 and taking a minor support of 50,500 odd levels last week. So for this week again, the gold prices will take some strong selling pressure around the levels of around 51,500 to 51,200. This will be the zone where the selling pressure can be reinstated, and on the lower levels 50,000 will act as a very strong supportive zone for this week. So till the time prices are above 49,900, prices will be in the range between 50,000 to 51,500 to 700. So sell on rise strategy can be maintained at the levels of around 51,200 with the stop loss above 51,500 to 51,600, and the lower levels target of around 50,500 to 50,000. Whereas speaking for the silver prices look a little bit less bearish than the gold prices. So a hedge position can be created wherein selling on gold and buying in silver prices can be maintained with the stop loss in silver maintained below 66,000, and on the higher side silver prices can test the levels of around 70,000 to 70,500. This will be a contra trade where we are bearish on the gold prices but we are slightly bullish on the silver prices for this week. Keeping a strict stop loss below 66,000 on the silver prices, which is the last week's low, a Friday low of 66,250. One should be buying at the levels of around 68,000 to 67,500 with a strict stop loss below 66,000. Now moving on to the energies market, crude prices, as we have seen last week, have witnessed a very strong selling pressure, taking a strong resistance of around 3150 and not able to cross the 3250 mark, as we have been discussing about the crude prices, that they are not able to cross the 3250 mark on week to week basis. And going ahead, a crucial level which is going to act as a very strong resistance zone for this week is going to be 3100 mark. Sell on rise strategy should be maintained in crude prices as well. A good level for selling for this week in crude prices would be around at the levels of 2950 to 3000 with the stop loss above 3100, and on the lower side potential targets of around 2800 to 2700 should be looked upon. Next in the our energies pack is the natural gas prices. As we have seen, the natural gas prices have been quite bullish. We should be looking at lower levels, or in fact at current levels as well, which is around 188 to 187 as buying opportunities. Natural gas prices look a little bit more bullish compared to other commodities, with a strict stop loss below 178 for this week. I feel that natural gas prices can test the levels of around 195 to 198 on the higher side with the strong support at 180 levels. Keeping a strict stop loss below 180, that is 178, one should be looking to buy natural gas prices for this week. Now moving on to the last segment, which is the base metal segment. In base metal pack, I think copper, nickel, zinc are going to be very bearish for this week. As we have seen, the start of Monday is not very strong, and we are looking at it as a very weak zone on rises on the base metal pack. As we have seen last week also, the prices have seen some selling pressure and unable to cross the 530 mark in copper and 1040 on the nickel prices. So keeping a target of around 518 to 510, that is 518 and 510 on the second target. Copper looks a shorting opportunity at the levels of around 525 with a stop loss above 530, and on the downside target should be maintained at 518 to 510. On the nickel front, as I said earlier, that the prices are looking weak as compared to last week, where the prices failed to cross the levels of around 1050 odd levels, maintaining above 1050. So sell on rise strategy should be maintained in nickel as well, with the targets of around 1070 to 1080. The prices look very bearish in nickel prices, especially on the high side. It looks like that the prices won't be able to cross the 1140 mark. So keeping the stop loss strictly above 1140, nickel is a very strong sell. That is about it from me, guys. Hope to catch you next week. Keep trading with strict stop losses, as the markets are going to be very volatile. Stay home and stay safe.